Welcome to The Explainer. Today, we've got a story from the world of space tech and high finance that honestly looks like it makes zero sense. We are, of course, talking about Planet Labs.
So Planet just dropped their full-year earnings report, and it's a real head-scratcher. I mean, how on earth does a company post a massive nine-figure loss and Wall Street cheers? The stock actually went up. What is going on here?
Yeah, it's just a bizarre picture, right? On one hand, you've got analysts raising their price targets, the stock is surging, but then you see this giant, scary number, a loss of almost $250 million. Normally, that's the kind of thing that sends investors running for the hills.
Okay, so what's the real story? What's the secret that Wall Street is in on that the rest of us are missing from just that headline? All right, let's dig in and figure this out.
To crack this case, we have to just ignore that big, flashy, negative number for a minute. We need to look under the hood at the actual health of the business. Because, as always, the real story is in the details.
So the first thing you see? Revenue. They pulled in a record $308 million for the year. And get this, that's up 26% from the year before. So their main business, selling all that satellite data, isn't just doing well, it's actually picking up speed.
Okay, number 2. And this one is a huge deal, especially for a tech company. They were free cash flow positive. All that means is that more actual cash came into the company than went out. That is a massive sign of real financial strength. It means they're not just burning money to grow.
And third, check out their war chest. They're sitting on a mountain of cash, over $640 million. That's up 188% in a single year. That kind of cash on hand gives them so much freedom to invest, to grow, and to handle whatever the economy might throw at them.
You know, when you add all of this up, they hit this really key benchmark that tech investors absolutely love. It's called the Rule of 40. Basically, you add their growth rate and their cash flow margin, and if it's over 40, you're looking at a top-tier company. Well, Planet didn't just hit it, they smashed it. It proves they're growing like crazy, but doing it smartly. Okay, so the finances are solid. The business is strong. But where is all of this record-breaking revenue coming from? Well, to figure that out, you really just have to look at what's happening in the world today. A huge piece of the puzzle is their defense and intelligence work. That part of their business is absolutely on fire. It grew more than 50% last year alone. And it makes perfect sense, right? With all the geopolitical tension in the world, getting a clear picture from space has become absolutely essential for national security. And this isn't just some abstract trend. We're talking about real, concrete deals. They've inked major contracts with countries like Sweden and Germany, with the US military, even with NATO. And these aren't just little trial runs. We're talking about big, multi-year commitments for critical intelligence capabilities. Now, this flood of new contracts leads to what might be the single most important number in their entire report. It's the number that tells Wall Street exactly where this company is headed. And that number is $900 million. That is the size of their contract backlog. It's the amount of business they've already signed but haven't delivered yet. And get this, it grew by an insane 79% in just 1 year.
So what is backlog exactly? Well, the easiest way to think about it is like this. Imagine a construction company that already has signed contracts for every single building they're going to put up for the next few years. That's what this is. It's future revenue that's already on the books, which is like gold for investors, because it makes the future so much more predictable. And what's really cool is seeing how this breaks down over time. Nearly 40% of that massive backlog is set to become actual revenue in just the next 12 months. That gives them an incredibly solid foundation for the year ahead. So with all this financial stability, Planet can now make its biggest move yet. They are shifting from just being a data provider, selling pretty pictures from space, to becoming an answers provider. And they're doing it with AI.
Yeah, their CEO, Will Marshall, basically said that AI is the next big thing that will completely transform their business. The whole idea is to stop just selling data and start selling the insights that are hidden inside that data. And with the mind-boggling amount they collect every day, you absolutely need AI for that.
And this is such a great way to see that change in action. Think about it. The old way was you take a million pictures, beam all that heavy data down to Earth, and then have a person spend hours looking for something important. The new way? Their OWL satellites will have AI built right in. They'll do the analysis in orbit and just send back the answer, like, hey, there are 3 new ships in this port. It takes the process from hours down to minutes. That is a total game changer.
Okay, so let's put all the pieces together and finally solve this mystery we started with.
How does all this great news explain why Wall Street was totally fine with that huge loss?
I mean, we've just talked about record sales, cash coming in the door, a future that's practically guaranteed by that huge backlog, and this killer AI strategy. So again, what is up with that $247 million loss? Where did it come from?
Well, the whole secret is in the accounting. The official GAAP loss includes a bunch of big, non-cash expenses. These are charges that don't represent actual cash leaving the company. The biggest one, over $160 million, is basically an accounting quirk that, funnily enough, gets triggered when the company's stock price goes up. So when you pull out all these paper expenses, you see the real operational picture. And that loss, it shrinks all the way down to just under $14 million.
And that is the absolute key takeaway. This wasn't money that flew out the door. It wasn't an operational failure. It was just a number on a page required by accounting rules, and it happened because their stock was doing well. The actual business itself, the part that generates cash, is healthier than ever.
So there you have it. That's why Wall Street just shrugged off that scary headline number. They saw it for what it was, an accounting ghost. They looked right past it and saw the real story, a fast-growing, cash-generating company with a guaranteed pipeline of future business and a brilliant AI strategy that could let them dominate their market for years to come.
And that really leaves us with one last big idea to chew on. We all know AI is changing everything, but AI is hungry. It needs data to learn. So as we build AIs that need to understand the real, physical world, who's in a better position than the one company that just happens to be taking a picture of the entire planet every single day?